Good morning, everyone, and welcome to today's webinar on paternity pay in Sage 50 Payroll. My name's Alice, and I'm going to be presenting today's webinar. I'm also joined by my colleague Duncan, who's going to be on the Q&A throughout the session. Now, this session today is one of the sessions in our Statutory Payments 2025 badge series, where we're running loads of webinars on different statutory payments. And if you attend at least 4 of the sessions, plus our statutory payments quiz, you'll be able to earn your very own digital badge. So more information on that towards the end of the session. And let's also look at what we'll be covering today too. So I am going to begin with an introduction to paternity pay, what it is and the entitlement and kind of qualifying conditions for it. We'll then look at the options to recording paternity details in Sage 50 Payroll, followed by ways that you can adjust your employees' payments to accommodate for this paternity pay. So I do have a few kind of common scenarios to show you in that section. We can then go through reclaiming statutory payments, and also a section on troubleshooting, so some common issues that people might have and how to deal with them or what to check. And then lastly, we will finish with some further support as usual and some time to make sure that we've answered all of your questions. So starting with that introduction. So SPP stands for Statutory Paternity Pay, and it's a payment that employers make to eligible employees if they and the partner are having a baby, adopting a child, or having a baby through a surrogacy arrangement. So paternity pay is the payment due to the partner of the mother or the main adopter. The entitlement is going to mean that employees can take either a single block of 1 or 2 weeks leave, or they can also take 2 blocks of 1 week. Now this did change at the beginning of this tax year, so the 2024-25 tax year, and this is the legislation for England, Scotland and Wales. Bear in mind, Northern Ireland's rules are different, with employees being able to take either 1 week or 2 consecutive weeks of leave. So that's a difference there. The employee's paternity leave can't start before the birth, and it must end within 52 weeks of the birth or the due date if the baby's early. And just bear in mind as well, these start and end date rules are different if you're adopting. SPP is paid a weekly rate of £184, 3 pence per week, or 90% of the employee's average weekly earnings. Whichever of those is lower, it'll pick that one. And a week of leave is going to be the same amount of days that an employee normally works in the week. For example, if you've got an employee who only works Mondays and Tuesdays, for example, a week of paternity leave for them is going to be 2 days. Or if they work Monday to Friday, a week of paternity for them will be 5 days. So that is the current weekly rate. But from the 6th of April 2025, when the new tax year is here, that is going to be going up to a weekly rate of £187.18. And when I say a weekly rate, that is for everyone who's eligible. So it doesn't matter what your payment frequency is, whether you're monthly, weekly, fortnightly, it is going to be that weekly rate. And we will take a little look at the eligibility in the introduction too. So to qualify for SPP, employees must have worked long enough, meaning that they've been continuously employed by you for the 26 weeks leading up to and including the qualifying week. And they also must still be employed up to the date that the baby's born or placed with the adopter. They must be on your payroll and earn at least £123 a week in the 8-week relevant period. And the 8-week relevant period is the 8 weeks leading up to the qualifying week. They also must give you the correct notice, which is going to be at least 15 weeks before the due date, be taking time off to look after the child or their partner, and be responsible for the child's upbringing. So that is the eligibility for SPP. Now, if you do want a bit more detail on this or more information, especially on what to do if your employee isn't eligible, I have put a link on the bottom of this slide which will take you to the gov.uk information on paternity pay. It's also got more information on entitlement and eligibility, so yeah, it will have some more detail there for you. So a lot of kind of dates and numbers and things to be aware of. So something I do want to show you is a timeline of key dates and things like that around statutory paternity pay, just to put this in a bit more of a visual. We're going to begin with the due date, which is also known as the expected week of confinement, or EWC. Going back 15 weeks from this is the qualifying week. So remember, this is when employees must tell you the due date at least 15 weeks before the baby is expected. Going back a further 26 weeks from the qualifying week, this is the latest that an employee can start working with you in order to qualify for SPP. We've then got the 8-week period where the average weekly earnings are calculated, and this is going to be the 8 weeks leading up to and including the qualifying week, where they do need to be earning at least £123 per week. And the earliest date that paternity pay can start is the date that the baby's born. So if an employee wants to go on leave before the baby's born, they would have to use holidays, as SPP can't kick in until the baby's born. And then last thing for this timeline is the date that the paternity leave must finish by, which is now within the first 52 weeks following the birth or placement in England, Scotland and Wales. Do remember, the rules in Northern Ireland are different. And if you do want a kind of copy of this timeline, if this is helping with those dates and things, do remember to get these handouts downloaded, which will have all of the slides in this presentation. And a little bit about reclaiming statutory payments as well, just before we move on to recording that paternity pay and payroll. So any statutory parental payment can be reclaimed from the government. Most employers can reclaim 92% of these statutory parental payments paid out. But if you're eligible for something called small employers relief, you can actually claim 103% instead. That is going to be 100% of the payment, and then 3%, which is known as NI compensation. And the way that you would qualify for small employers relief is if your total Class 1 national insurance contributions are £45,000 or less in the tax year before the qualifying or matching week. So in this case, if your total national insurance contributions were £45,000 or less in the 23-24 tax year, you would be eligible for small employers relief in the current tax year, so the 2024-25 tax year. And this goes for all statutory parental payments too. So do bear this in mind, ready for the new tax year in April too. This is something that we do recommend checking for and applying at the beginning of the tax year if you qualify. And we will be talking about that during our payroll year-end webinars too. But if I just turn my camera off for a moment and bring up payroll, I do want to show you how to check your total national insurance contributions for previous tax year, and also where to find that small employers relief setting to enable this if you're eligible. So the easiest way to check your national insurance contributions for the previous tax year is to first of all change your process date to the last day of that tax year, which in my case would be the 5th of April 2024. If I just find that on the calendar and click OK. And then from the payroll link section, I've got a link there for the P32 report. You can also find this in the post-update reports, which is just this icon just above the employee list. Now, normally you would run this report for one tax month at a time, so you'd run it like tax months 1 to 1, 2 to 3, 2, 3 to 3, etc. But in this case, I'm actually going to run it for months 1 to 12, so we get the whole tax year, and we get that whole figure that we need. And let me just make this a little bit bigger. So this is the P32, and on this report, line number 4, this is the figure that I'm going to need. So make a note of this. We can see that mine is 33,500. So that is £45,000 or less for the previous tax year. And because it is less than that, this means that I do qualify for small employers relief in the current tax year. So now that I've checked this, what I can do is just close the report. I'm going to move my process date back to my next pay date as normal, which is the 31st of January 2025. And I can then enable the small employers relief setting. So for this, I'm just going to go to company, and we'll find this setting in settings. And on this first tab, on the right-hand side, you can see this tick box here, which is called Eligible for Small Employers Relief for 2024-25. So if you do qualify, you can tick this box to say that you're eligible, and that is you good to go. But if you aren't eligible, of course, just come in here and make sure it's unticked, and then to save those settings, you're going to click OK. So this means that I can now reclaim 103% of any parental payments there. And we will come back to reclaiming statutory payments a little bit later on in the webinar once we've processed some. So moving on to the next section, which is going to be about recording paternity pay. There are a few things that you're going to need to record this. So first of all, you're going to need the dates that your employee wants to start the paternity leave. You're going to need a declaration, which does include a baby due date. This is most commonly the SC3 form. Sometimes employers have their own version of this form, so if you've got your own, by all means use that, but if not, the SC3 form. And you're also going to need the date that the baby was born. So remember, this is the earliest date that the SPP can begin. And once all of these dates and details and things are in Sage 50 Payroll, the program's going to automatically calculate the amount of SPP due in the current period, all in line with current legislation. So what we'll do actually, we'll jump straight back into Payroll and we'll go ahead and record some SPP. So there are a few ways that you can record this in the programme. It is totally up to you which one that you use. I am going to record it via the quick SPP option primarily today. I do find that's often the best for initially setting up a parental payment, but you could also do it in the employee record, which I will show you a bit later too. So employee number 3 is the employee I've got going on paternity. And I can either go to my payroll links. You can see I've got the option for recording paternity there. Or if I go to my employee tasks, you can see I've got that same option there. But both of those are going to bring up this window for you. So quick SPP is a convenient way to record it. Everything is in one place, it's all on one page, and it's just a case of kind of working through this information and inputting it. So first thing I'm going to do is actually tick that I've received that declaration. So I do have that SC3 form from the employee. And I'm also going to enter the expected date of birth, which is going to be the 19th of January. And then click Check Entitlement. And what that is payroll checking if those qualifying conditions have been met. So based on the kind of timings and key dates that I mentioned earlier on in the timeline, it'll kind of use this expected date of birth and check those. So if we look on the right, we've got these qualifying conditions. Evidence received, yes, we've ticked that we've got that declaration. Have they worked long enough? So this means, is their employee start date at least 26 weeks before the qualifying week? Yes, it is. And have they earned enough as well? So this means they've earned over an average of £123. And just remember that's calculated in the 8-week period leading up to and including the qualifying week. Now, speaking of earnings, we can see just below this too, Payroll's worked out the average earnings for this employee at £461.54. Now, if you're curious how Payroll's worked this out, you can click on Earnings During Set Period in the bottom left here. And this is going to bring up a window showing what payments the employees received in that 8-week relevant period. So I can see across those 8 weeks, this employee's received 2 monthly payments of £2,000, which have been used to calculate this figure here. Some key dates on the right as well, of course, based on that due date that we've entered there. And another little thing here is this table. So this is just kind of where you would enter the last day of work for week 1 if they're taking 1 week of leave, or for both of the weeks if they're taking 2. So remember, they can take either 1 or 2 weeks leave. If the employee's only taken that 1 week, only enter this one. And then if they're taking both, of course, enter both dates. And they can be taken non-consecutively. So if we put these in now, the employee's last day of work for week 1 was the 19th of January. And For week number 2, they actually want to take this a little bit later on in the year, and they want to take that in May, and it's going to be the 18th of May for them too. So you can enter those non-consecutively with that table, but just bear in mind the leave does need to be taken within 52 weeks of the birth. Now, something that can catch people out with these dates is that these are actually the day before the SPP payments will begin for each week. So with the 19th of January here, that is actually a Sunday, the SPP payments will actually begin the following day on Monday the 20th for this week. And same with the 18th of May, the SPP will begin on Monday the 19th. And a little tip with these as well, the employee doesn't have to give you a precise date when they want to take the leave initially. They can give you a general time, such as the day of birth, or 1 week after the birth. As you know, sometimes people don't 100% know those dates. But as we can see, still nothing calculating, although we've put in those dates. One thing we do need to put in, so the last thing there to get this calculating is going to be the actual date of birth. So remember, this is the earliest day that the SPP can begin, and it won't calculate until I've put this in. So the actual date of birth was the 19th of January. And if I go ahead and click Tab on my keyboard, that will refresh the page there. And I can now see in the bottom right that entitlement is calculating, and it's showing the full 2 weeks that the employee is entitled to, with that weekly rate of £184.03 per week. So that is how you record SPP. Other than that, special circumstances, if necessary. So this is basically just an option if the employee has been absent due to a trade dispute. So you can pop that in there if necessary. But other than that, if you're happy with the information, just click Save. And another option in here is this print option. So this is going to print out a nice summary of the information. It might be a good thing to keep for your record, just so you can kind of know exactly what you've put in. And it's going to look a little bit something like this. So you could just save that for yourself, print it out, and just kind of keep record of all of the kind of key dates and the average earnings, and of course that they've met those qualifying conditions too. But I will just go ahead and close this. So that was the recording paternity option, also known as Quick SPP. Another way that you can enter that SPP is going to be in the employee's record, in the absence tab, and then SPP at the bottom. So this is another way that you can record that. Now, since we already have, we can see the information's transferred across into here anyway. But if you were recording it in here, it's just going to be that same information that you'll enter, just a slightly different layout. So we've got those dates and things here. We've got the declaration tick box too. And you'd be able to click this button to work out the average earnings for the employee, which we can see there too. And then we've got different tabs along the top. So the 8 weeks gross, this is going to be showing the payments that Payroll's used to calculate the 8 weeks average earnings. Also confirmation of the qualifying week for them. And also the entitlement tab, where I can again see that qualifying week. I can see the start of the paternity pay period, so when the payments begin, which is the day after that first week they're taking. And I can also see currently due in this table is 1 week of SPP. So it's showing as currently due as it's in January, and because my process date is the 31st of January, this first week is included in the current period. And then just underneath, of course, a full 2 week entitlement for them. But let's go ahead to enter payments for this employee. I do want to show you that that is going to be automatically calculating for you. So again, I've checked my process date. That is set to my next pay date, 31st of January. And let's go ahead and click enter payments. So if we go straight to the summary tab, I can see we've got that statutory paternity pay calculating £184.03. Now, if my process date was before this SPP begins, there actually wouldn't be anything here, as there's nothing to calculate in the current pay period. So just bear in mind your process date can and will affect the statutory payments calculating It will only pay up to and including the process date. And because this is the weekly rate, we know that this is 1 week that it's paying. But if it was different or you weren't sure exactly how much it's paying in the current period, you can use this little drop-down arrow here. Select your SPP type. And that's kind of a little shortcut to the paternity pay information in the record. So what you'd be able to do is go straight to the entitlement tab and quickly see what's currently due and kind of why it's paying that figure out. It also means that you won't lose your place and enter payment. So if you've got a lot of employees highlighted, you don't have to close out of it to get there. You will just be able to use that little drop-down arrow. So we can see now that that is calculating for us. So a little bit of a recap of what we did there for recording paternity. So first of all, to record it, you will need the dates, the declaration and the date of birth from your employee. And today I recorded using the recording paternity pay option, which is going to be from your payroll links or your employee tasks. Remember though, you do also have the option to do it in the employee record, in the absence tab and SPP, so whichever you would prefer. We then checked in enter payments and we saw that that was calculating. And since the first week of SPP was in the current period I was processing, we saw that weekly rate of £184.03 in the summary tab. And then of course that little tip, so if you do want to see a breakdown of this amount and check exactly what it's paying, click the drop down arrow, select your paternity type, and that is going to be a shortcut to the SPP information in the employee record. But that is the statutory amount taken care of. Now I am going to dive into adjusting your employee's pay. Now, before I do go into this, just bear in mind this is very company specific. It does depend on the contract that you've got with the employee, as well as any other company policies that you might have. So if you've got a certain way of adjusting payments which works for you, absolutely continue with that, that's fine. But in this section, I'm going to show you some more common scenarios for adjusting pay. So you might either pay the employee's usual wage by topping up the SPP with salary, or you might just pay them the statutory amount. So I do have an option for both of these scenarios. So we'll just go back to payroll and back to enter payments. And scenario number one that I'm going to show you, my company policy in this scenario wants me to top up that SPP to their full wage. But at the moment, if we go to the summary tab, I can see that employee's full wage of £2,000, which is exactly what they normally get. But we can actually see that payroll's adding that SPP on top of that. So yes, my policy might require me to pay their full wage as normal, but not this much. I want to pay them a total gross pay of £2,000, made up of SPP, and then topped up with salary. And the make up basic option here, this is going to allow me to do exactly this, and it's going to reduce the salary to accommodate for this statutory payment. So let's see how this works. So I've just gone back to the payments tab. And the first thing I need to do is make sure that I've specified the amount that I want to make up their salary to. So in this case, it is going to be their full monthly salary of £2,000. So I've made sure I've got that in there. And then I can come back to the summary tab and I can click Make Up Basic. We will get this window, so it's just going to say that we've selected to make up to basic the statutory payment for this employee. And it's just letting us know that the hours and number value of the salary pay element will need to be reduced. Confirmation to continue, and I'm going to go ahead and click yes. And straight away, we can see that that gross pay is reduced to that amount that we'd specified, £2,000. And if we go back to the payments tab, I can see it's done this by reducing the hours and number value of the salary pay element to accommodate for that statutory payment. So they're getting that weekly rate, that week of SPP, topped up with salary. And just remember, once that statutory payment is over, you will have to come and reset this figure back to whatever it needs to be for you. But that's Makeup Basic. That is scenario 1, where you would top up the employee's pay for a certain amount of time if that's what your company policy specified. Just resetting that as well for scenario number 2. So moving on to that next scenario then, something else I want to show you is something called a manual adjustment. So this scenario is if you don't have a particular top-up policy, you might just pay the employee the statutory amount while the employee is on leave, but you might need to work out how much to pay the employee for the other days that they've worked in the pay period. So for example, this employee's worked for 13 days in January before they went on paternity leave. And after that first week of paternity, they've come back to work and they've worked a further 5 days in the payment period. Now, this might differ with your employees, obviously just based on their working patterns and working days, but this employee works Monday to Friday, and out of the total 23 working days in January, they've worked 18 of them. So for this scenario, I do need to work out how much salary the employee is going to get for those 18 days. As currently, this £2,000 is for the whole month, so it's not taken into consideration the fact that they went on paternity. Fairly straightforward adjustment to make, and I can do it in this Payments tab, just using this calculator icon. Again, make sure the full wage is there to start with. I'll click this calculator icon, and the calculation I'm going to do is the days worked divided by the total working days in the pay period. So I'll do 18 days worked for this employee, divided by a total of 23 working days in the pay period for this employee. I'll click equals, and then I'll click tab on my keyboard, and we can see it's reduced that salary accordingly. So out of this full £2,000, this is how much they'll be paid for 18 days worth. You can also use this manual adjustment for leavers as well. So maybe they've left like halfway through the month, or they've only worked a certain amount of time before they've actually left. You can use that adjustment to work out how much they need to be paid for the period as well. But I'm happy with this adjustment now for this employee, that manual adjustment. So I've worked out, how much they needed to get for the days that they've worked. And this can actually be applied to any payment frequency too. My example just happens to be monthly. And at this point, I'm ready to move on with my pay run. But one more adjustment that I do want to make you aware of, you might need to adjust the employer pension contribution. So usually, the employer is required to keep up with their regular pension contribution for the employee. My employer contribution would normally be £44.40 for this employee, but because of that manual adjustment that I've made, and of course the salary being reduced, so have the contributions. So what I need to do is override the pension contribution to make it to the regular amount again. Now, if you've never heard of this or you're not exactly sure whether this applies to you, I would absolutely advise speaking with your pension provider first of all, just to see if this does apply to your company. You might just have to leave it as it is. But for those of you who do need to keep it at that regular contribution, nice quick way that you can do this and amend it for the employee. So I'm going to click this employee icon in the left here, which is like a shortcut to the employee record. And I'm going to go to pensions and manage schemes and then edit. At the moment, I can see the employer contributions is set to a percentage and 3%. But what I can do for this is I can actually change it to a fixed amount, and I can specify that regular contribution, so £44.40 in this case. I can click OK, close and save. And when I go back to enter payments, and if I just check that employer contribution now, I can see we've overridden that contribution and it's now that regular amount of £44.40. So this will only change the contribution for this one employee, even if there are other people on the same scheme. But we can see that there, that's nice and quick to do. Just use that employee shortcut in enter payments. Bear in mind too, once the statutory payment has ended, you will have to go back into the employee record and just change that back to the normal contribution again. So for me, I would change it back to a percentage and 3%. But at the point where you're happy with all of the payments that you've entered, of course, you can just continue with your pay run as normal. Move on to your next steps. So your pre-update reports, uploading the online pay slips, for example. And then after this, it'll be time to update the records. Now for today, I am going to skip ahead to update the records just so we can get through the content. And I'd always recommend taking a backup at this point as well, just to make sure that your data is secure. And if you do need to get back to this point, you've got the data to do so. I'll update everyone there. And I can see my last updated date is now 31st of January. I'll also skip ahead to submit the FPS. And this is just going to submit the usual information. So I'll click continue, check those details there and click submit. And we've got all the liability for each of the employees getting submitted across to HMRC. So payments, deductions, total liability due. And I'll wait for that to send. Now, because we're reclaiming statutory payments, we will be doing another submission to HMRC to tell them that we're reclaiming, and therefore the payments due to HMRC will be reduced. But before we go and do this, I do just want to have a little bit of a recap of adjusting payments. So a couple of scenarios that I showed you there. First of all was Makeup Basic. So this is great for a situation where you're required to pay a specific amount to the employee, such as keeping up with their normal wage for a certain amount of time. And the Makeup Basic option will reduce the salary to accommodate for that statutory payment. You also have the option of a manual adjustment. So this will allow you to calculate how much salary an employee will get based on the days or hours that they've worked. So in my example, the employee worked 18 days out of a total of 23 in January. And I used the calculator to do the days worked divided by the total working days in the period to get the salary for them. So they are just a few common ways to adjust the employee's pay, but of course, if you do have a way that works for you, which you use already, feel free to keep using that, that's fine. And then last adjustment was the employer pension. So do double check with your provider first of all, but if you need to override that contribution and keep it at the regular amount, you can do this in the employee record, pensions and managed schemes. But now that we've done our pay run and we're happy with everything so far, all of those adjustments and things, and of course we've submitted the FPS, it is going to be a case of now reclaiming these statutory payments. So in terms of reclaiming, I did explain earlier that all of the employers can reclaim at least 92% of parental payments. But if you're eligible for small employers relief, which I am, that's going to be 103% instead. To get that money back at the end of the month when you make your payment to HMRC, the amount that you reclaim is going to be taken away from the amount due. And the P32 does that calculation for you, so you can clearly see the amount that you need to pay with that reclaimed amount considered too. So information on statutory payments and reductions in what you're paying across to HMRC are not included in your normal FPS, and that's why you need to send another submission, which is going to be the EPS or Employer Payment Summary. And this is going to make sure that HMRC know how much you've reclaimed and how much you're going to reduce your payment by. So let me take you through these steps of the EPS and reclaiming those payments. So I'll be reclaiming the SPP that I've just processed in January. And the deadline for this, I do have until the 19th of February to do so the 19th of the following month. First thing I'm going to do for this is run the P32 report for January, tax month 10. And I do have a quick link to do this, again, in the payroll links, which I showed you before. Little tip, if you can't see some of these options in here, you are able to resize this section, so just bear that in mind. But I'll go ahead and click P32 report. Make sure the tax month is correct, which it is, tax month 10 and 10, and click OK. I'll make this a little bit bigger. And now that this is loaded up, it's going to be lines 8 and 9 that I need. So total SPP recovered and NIC compensation on SPP if due, so that's small employers relief. And the total of these two lines is going to be that 103% of the amount that was paid out because I enabled small employers relief in my company settings earlier. And a little bit further down the report on line 16, I can see the total NIC amount that will be deducted from my total liability due. So if the total amount due is lower than what was submitted on the FPS, and that's the reason that I need to send an EPS at the end of the month so that HMRC are aware of this reduction. Now the EPS is a monthly submission, so even if you do payroll weekly or fortnightly or 4-weekly, you will need to wait until you've processed all of the pay periods in the tax month to send the EPS. But let's just close this report for now and submit that EPS. A couple of ways you can find this. The one I'm going to use today is just the option right above that P32 report, Employer Payment Summary. But you do also find it in your e-submissions and Employer Payment Summary there. So first of all, it's going to come up with this window, and this is asking why you're sending the EPS. You do have some options there. We're actually selecting this first one, so because we're recovering statutory payments and we're adjusting our payment to HMRC. Click Next. We've got confirmation of the tax month there, tax month 10. And then it's going to show the amount of statutory parental payments recovered across the year. So this is a year-to-date figure, not just this month. So yours might look a little bit different to mine if you've already had people on parental payments. I'll click Next. Fill in the CIS deductions if necessary. Same with apprenticeship levy. And then to complete the wizard, I can click Next and Finish. And that's going to bring up the actual submission window itself. So click Continue. Again, check those company details. Click Submit and submit again. And this is going to report the reclaimed amounts for tax month 10 to HMRC. So HMRC will be able to work out the actual amount that I need to pay, and that will match the total that was on the P32 report. But that was how the reclaim works. So check the P32, and on lines 8 and 9, that will show the amounts for the SPP. Of course, if you are eligible for small employers relief, it will show that total of 103%. And you'll then need to send the EPS to inform HMRC of these amounts that you'll be reclaiming and therefore reducing your payment by. Now, common scenario, let's say that you forgot to send the EPS. You technically do have a deadline of the 19th of the following month, but if you do forget, because it sends a year-to-date figure to HMRC, you are able to send it in the next pay period, and that will report the figures from any previous months that have been missed. So worst case scenario, do forget to send it, just send it the next month, and HMRC will get all of the figures that they need. But with that, that does bring us on to the last section of the webinar, just a short one for this one, but that's troubleshooting. So this is just going to help you kind of avoid some common problems or issues that might arise with statutory parental pay, statutory paternity pay, sorry. So one of the kind of most common things with SPP is that if it's already been paid in the past, so when you enter it for another child, for an employee, nothing's calculating. So if an employee has had SPP before, there is some information that will remain in the employee's year-to-date values, and this will need to be reset to be able to calculate the SPP entitlement properly for the new baby. It's specifically the weeks paid in the year-to-date values which are always retained. So as you can see in the screenshot on the right there, it does show that 2 weeks have already been paid for that employee. So payroll thinks that they've already had their entitlement and won't pay any more, hence why it doesn't calculate. But the reason this information stays there is just in case there is a paternity period that spans over 2 tax years. And that's why it needs to be held onto by payroll. But if you are recording details for a new baby, a few ways that you can clear those year-to-dates. There is a manual way where you can go into the year-to-dates in the employee record and reset those values, so set them to 0. Or if you use the recording paternity screen that I showed you earlier, if there were already SPP details in there, you will see the message that's on the left of the screen there. So that will give you the option to clear the information. Now you do need to be careful with that message. If you're in the middle of paying a statutory payment, you don't want to accidentally clear that information by clicking yes. So if you do see that window, try to get in the habit of clicking no. And what that's going to do is just bring up the information instead, and just means that you won't accidentally clear those values. But of course, if you do want to clear the information for the new child, click yes on the message to remove the previous information. That'll clear those year-to-dates and enable you to enter the information for another baby, but also for the SPP to calculate, as it wouldn't have before. So that is probably the most common problem for SPP not calculating, where payroll holds on to that previous information and it basically just thinks they don't need any more paternity pay. A few other tips for SPP not calculating. So other reasons might be that the average earnings are too low. So if that's the case, go to where you recorded the SPP and check the average earnings and the payments used to calculate them. So remember, it needs to be at least £123 per week. Another reason, you might have had manual SPP selected by accident in the employee's record. That would mean that payroll's expecting you to do it manually, and so won't kind of automatically calculate a figure for you. Or maybe the SPP amount's a little bit less than you're expecting. So if that is the case, first thing I would do is check the process date. If that's wrong, the amount will be different, so payroll might not be calculating as much SPP as you're expecting in the current period. Remember, the process date will determine how much is paid. It's going to pay up to and including the process date. I would also check in case the employee's 90% average weekly earnings are below the standard rate of SPP, as of course the lower of these two are going to be used. You can read more about how to fix any of these issues on the Help Centre. While I don't have time to obviously go through all of them today, I have linked loads of articles throughout the slides to kind of help you just to make sure that you've recorded it correctly and processed the statutory paternity pay. But that does bring us to the end of the main content for statutory paternity pay. Before we do wrap things up though, some further support that I'd like to go through with you. And then of course, still some time left to answer any questions. We will stay on for 5 or 10 minutes or so just to get through the rest of them. So for webinars, me and Duncan do run these throughout the year for Sage 50 Payroll. We've got loads coming up this month, including more on the statutory parental payments for the 2025 badge. So we've got maternity pay, we've got more paternity pay, shared parental pay as well. We've also got our next HR advice session, which is going to be all about understanding maternity and paternity in the workplace. And we do have repeat sessions for most of these too, so that is going to be a couple of different dates and times to choose from, whichever suits you best. And remember, if you do attend at least 4 sessions and come along to the statutory payments quiz, you will earn your very own digital statutory payments 2025 badge. So head to sage.co.uk/webinars or click register now on the handouts just to read a little bit more about those upcoming sessions. And yeah, we'd love to see you all there. We've also got the Sage Help Centre, sage.co.uk/help. All of the articles, the kind of Sage articles that I've linked are from this Help Centre, but you are able to search the knowledge base if there's anything you want to know about or any problems that you're having. You can access support guides, step-by-step kind of guides and videos, recordings of our webinars, and if you do need to get in touch for any reason, you do have the option for technical support or to get in contact with the experts too. And lastly, Sage University. This is sageu.com. You can set up a free account on here and access loads of different e-learning courses. We've also got bite-sized learning and a little bit shorter courses there. And it does give you the opportunity to earn product certification too. So it's a great way to expand your knowledge on Sage 50 Payroll, or if there's any other Sage products that you're interested in, you do have the option to learn about those too. But that has brought us to the end of the session, so thank you very much for your time this morning. If you are leaving us now, remember you still can download the handouts until we end the session. These are going to include all of the slides in the presentation. And feel free to copy and paste any of the Q&A if you would like to keep any of those questions or answers for future reference. I would just recommend kind of copy and pasting them into something like a Word document. But last thing from me, there is going to be a short survey that you'll get as you exit the webinar. If you do have just a moment to fill that out, me and Duncan would really appreciate that. We do read all of the feedback that you leave us, and it does go a long way, so thank you for that. Still a few minutes for your questions, so what I'm going to do is just go on mute for a few minutes, make sure that we've answered all of those there, and I will be back in a few moments to say goodbye, so I will be on mute just for a couple of moments. Hello everyone, that's just me back again. It looks like we're about done, so massive thank you to Duncan for manning the Q&A there throughout the session. Do keep an eye on your emails as well for a recording of the webinar coming through. That should be coming through in the next couple of hours or so. But we hope you enjoy the rest of your day. We'd love to see you on some more webinars that we've got coming up, especially with the Statutory Payments Badge too. But on behalf of me and Duncan, we will see you next time. It's goodbye for now.